thank you again for coming out today. I'm Margie Cusack. I'm Director of Real Estate and Tax Services for Cook County Clerk David Orr. We are issuing the 2014 property tax rates today. They will also be out on our website shortly. We also have a couple of Harris School of Public Policy students with us here. They're graduate students of public policy to learn a little bit more about local property taxation. You might know that David Orr is now a senior fellow at Harris School, so we wanted to give them a little bit of the nitty-gritty of what we do in terms of local property tax extension. Now I'll introduce Tanya, who's going to go over a quick PowerPoint of how we determine tax rates in Cook County.
Hey, good morning. So as Margie and Jim said, today we're going to be talking about the 2014 property tax rates in Cook County. I'm going to briefly go over how we calculate rates. I'm going to talk about what's happening with the rates this year. I'm going to talk about some of the factors that are affecting the rates, as well as the impact that the rates are having on taxing districts and on homeowners. So in December of each year, the property tax districts in Cook County filed their tax levies with our office. There are about 1,400 taxing districts in Cook County. That number is down slightly from last year, in part due to a collaborative effort between the clerk's office and municipalities to reduce dormant special service areas. These are districts that had not been levying for a number of years, that were showing up on the tax bills with a zero line item. So we worked with the municipalities to terminate those districts and remove those from the tax rolls. After all the tax levies are filed in the clerk's office, starting in January, our staff examine all of the levies and we determine what sort of reductions need to be applied to each levy. We reduce them as needed to comply with statute. There's two levels of reduction that we apply to taxing districts. The first level of reduction is done to individual funds within a taxing district, and that is to bring each fund down to its statutory rate ceiling. The next level of reduction that we do is to bring the overall levy for a taxing district into compliance with the property tax extension limitation law, which is also called PTEL, or the tax cap law. Now what the tax cap law does is it says that a district, the amount of money that a taxing district can receive through property taxes in a given year cannot increase by more than the rate of inflation from the previous year. The rate of inflation that we use in Illinois is the Consumer Price Index for urban areas, also known as CPI. This year's CPI is 1.5%. Last year it was 1.7%, and next year CPI will be 0.8%, which is the second lowest CPI to be issued in the 20 or so years that the tax cap law has been in effect. Once we've determined how much money each taxing district is entitled to receive through property taxes, we take that total amount and we divide it by the total value within each district to get the final tax rate for each taxing district. So what's happening with tax rates this year? Well, for the city of Chicago, rates are down 0.3%. In the northern suburbs, on average, we're seeing rates go up about 1%. And in the southern suburbs, we're seeing an increase of about 5% on average for tax rates. So the factors that affect the tax rates are the two parts of that equation that I mentioned before: the total amount of tax to be billed and the total value in the taxing districts. So overall this year, the total tax countywide increased 2.16%. This is about the same level that it increased last year. You may be wondering why, if CPI is 1.5%, why are taxes overall going up 2.16%? This is primarily because certain districts such as home rule municipalities, special service areas, and TIFs districts are not subject to the tax cap law. In addition, specific funds within taxing districts, such as debt service funds and other special purpose funds, are also exempt from the tax cap law. Also, value in a district that is come in due to new property is not captured by the tax cap law. The other part that affects rates is the equalized assessed value. Countywide, equalized assessed values, also known as EAVs, went up 1.82% this year. The two things that affect EAVs are the equalization factor and individual assessments of property. This year, the equalization factor for Cook County went up 2.4%. The equalization factor is the number that the Illinois Department of Revenue issues each year to bring the assessed value of properties in Cook County up to a level of 33.33% of market value. This year, as I said, it went up 2.4%. And then within Cook County as a whole, the assessments district by district did kind of vary from different parts of the county. So if we take a look at what's happened to Cook County EAVs over the last 20 years, you can kind of see here at the beginning of the chart that in the mid to late 90s, EAVs went up at kind of a moderate pace, but starting at around 2001, they started to go up much more steeply, peaking in 2009 when the total equalized assessed value of all properties in Cook County was at $178 billion. After 2009, EAVs began to drop rather quickly the next several years. And this year, for the first time since 2009, EAVs have started to come up this year with that increase I mentioned of about 1.82% this year. The total value this year is $128 billion for all taxable property in Cook County. So that 1.82% increase in values that I mentioned countywide is not uniformly distributed throughout the county. You can see that in the southern suburbs, equalized assessed values decreased 3.2%. This is primarily due to the reassessment done by the Cook County Assessor's Office for 2014 in the southern suburbs. So the assessor brought property values down in the southern suburbs, which counteracted the effect of the equalization factor increasing. In the city of Chicago, EAV went up 4%. This is in part due to the increase in the state equalization factor. It's also partly due to the expiration of several TIFs in the city of Chicago. I will explain that a little bit more later, but that's what's happening in the city of Chicago. The northern suburbs are seeing a 1.4% increase in their value this year. That's sort of a balancing act between the equalization factor going up and individual property values going down due to individual appeals, property by property. So what is the effect that the EAV has on property tax rates? On this graph, the blue line is the EAV of a typical taxing district over the years. It kind of goes up and down over the years, peaking in 2009 and going back down again. As the EAVs go down, rates go up and vice versa. So that's the effect that EAV has on tax rates. However, regardless of what's happening with EAVs, again, the blue line, the green line shows the amount of tax that a typical taxing district receives each year. This number is going to typically grow over time, regardless of what's happening to EAVs. As I mentioned before, the city of Chicago saw their EAV increase 4%, and I mentioned that this was due in part to expiring TIFs. There were about 8 TIFs that came off the tax rolls in the city of Chicago this year, but by far the largest one was the Near South TIF. The Near South TIF is located south of Congress Parkway. This is Congress Parkway here. We've got the lake over here, we've got Soldier Field here. It's about 350 acres in total. In 1990, when the TIF was first established by the city of Chicago, the value of the property within this TIF was about $128 million in value. Over the course of this TIF's life, it grew in value to $1.1 billion, leaving about $1 billion in growth of EAV that was unavailable to the taxing districts for their tax base over the years. We're going to release more information specifically about TIFs when we have our TIF release next month, but I did want to make note of this Near South TIF expiring because of the impact it has on rates. And the impact it has on rates is that $1 billion in equalized assessed value that's now available to the taxing districts allows them to increase the amount of money they receive without increasing the property tax rate. that the taxpayers are being applied. If you want to find out more about the history of this particular TIF, over the course of its life, it brought in $638 million, $65 million of that was last year. We do have like a complete history of its revenue on our mapping application on our website, TIF Viewer. So if you want to take a look at that, you can zoom around the map and take a look at specific parcels and things. So overall, rates in the county varied widely from district to district. The largest dichotomy you see here, the highest tax rate was in the village of Ford Heights at about 38.5%. The lowest composite tax rate in suburban Cook County was about 7.1%, and that was up in the village of Barrington and Unit School 220. The city of Chicago's rate is a little bit lower still. It's about 6.8%, and the reason the city of Chicago's rate is typically lower than other districts is because the city of Chicago has such a large commercial industrial value base. So what does all of this mean to the average homeowner? Well, in the city of Chicago, the average homeowner could see about a 2.8% tax increase. For the average homeowner, this means about a $90 increase on their tax bill for a typical home. Where does that money go each year? In the city of Chicago, it breaks out like this. This blue portion of the graph is the Chicago Board of Education. It's about 54% of the tax bill in the city of Chicago. That's going to be true pretty much wherever a person lives in any municipality. The school district is going to typically get about half of your tax bill. Over here we've got the city of Chicago here in green, as well as its two associated funds, the school building fund and the library fund. Together those add up to about 22% of a normal tax bill. Cook County and the Forest Preserve add up to about 9% of a normal tax bill. City colleges of Chicago are about 3%, and the Metropolitan Water Reclamation District and the Chicago Park District are each about 6% of a typical Chicago tax bill. In the northern suburbs, bills are going to vary pretty significantly from district to district, but the average north suburban homeowner is going to see an increase, or may see an increase of about 2.4% on their tax bill. This would equate to an average of about $150 for a north suburban homeowner. The south suburbs, again, the bills are going to vary pretty widely by district, but the average south suburban homeowner could see a 1% decrease in their tax bills. The reason for the decrease this year in the south suburbs is primarily due to the fact that the south suburbs were reassessed. So individual property values have gone down in the south suburbs, while in the north and in the city of Chicago, they've either increased or gone down very slightly. So what this means to the average south suburban homeowner is a reduction in their tax bill of about $50. So in closing, I just want to mention that, as I said before, there are about 1,400 taxing districts in Cook County. There are also about 1.8 million parcels in Cook County. So we have to calculate rates for all of these districts and for all of these parcels. And there's a lot of variability from district to district and parcel to parcel. And there's a lot of factors that impact the individual tax bill, including the specific taxing district a homeowner may live in, the individual property value increases and decreases of a property, as well as the various exemptions that property owners are allowed to take each year. We do have a lot more detail on specific rates by district and by township in our annual tax rate report, which is in your press packet. Feel free to look through that, and we also have that packet available on our website. And I am available to take any questions.